gold spot price has officially crossed over $3,000 an ounce. Or has it? According to Kitco, the price of gold is $2,994 an ounce. What? Goldprice.org has the spot price listed at $2,995. Let's look at some other dealers though. JM Bullion has gold at $3,010 an ounce. Okay, that's over $3,000. And APMEX is sitting at $3,014. Okay, so surely gold went over $3,000, right? Gold futures are listed at just over $3,000 an ounce, but these are not the same thing as spot price. So in this video, I want to finally answer the question, why do different websites have different prices listed, and what is the real spot price? Let's get into it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. Thank you so much for watching. I do sincerely appreciate it. I want to start with gold futures. What are these and why are they important? Well, according to this article, they say commodities like gold have standardized forward contracts traded on their fluctuating values, also called futures contracts. They are listed on various futures exchanges throughout the world. They go on to say a commodity futures price is based on the ongoing price discovery for optional future delivery of that particular commodity, most often settled in cash. Sometimes futures contracts are actually settled in the real world tangible good based on the stated contract's explicit quantity. So basically, it's a price for a future optional delivery of that commodity. Now we get to spot price. How is spot price determined? Well, they say the spot price of gold is actively determined by a commodity's most highly traded futures contract at that time. The most traded futures contract can be the current month, or it might be 2 or more months into the future. They also say today the gold spot price is a combined indexing using many of the world's futures market prices, but based on trading volumes, the gold spot price is currently mostly influenced by the highly fractionally reserved COMEX and London gold market. So spot price does take into account futures pricing, but also the trading that's going on right now in New York and London. They also say almost all competent online bullion dealers host live gold spot price on their website, typically based in their local currency. Wait a minute. Does this mean they can pick whatever they want for spot price? Well, I actually asked this very question to CPM Group founder Jeffrey Christian regarding silver spot price last summer. Listen to what he had to say.
We pointed this out decades ago. It's like, in the morning you wake up and on the radio they say the spot price of silver is $29.75. And you say, which spot price? It's very important to understand. London has an OTC market. 60+% of the trading in the London market is spot. So it's T+2, it's going to T+1, and ultimately we hope it goes to T, but it's for spot delivery, 2-day settlement. I'm going to agree to buy silver from you today at a given price. I will transfer the money tomorrow, and you will transfer the money 2 days from now. T+2. So that's a spot price that is spot. In New York, we have spot prices that dealers use among themselves, and each dealer has his own spot price. And the spot price varies depending on which customer he's talking to, as do forward prices. But the New York price also has the futures market, and those are futures prices. So right now, we're looking at September silver, which is not spot like London. It's a month from London's price. And in gold, we're looking at the December contract because it's the most active futures contract right now. So it's the nearby active futures contract. There's a nearby active October contract, but most of the trading and open interest in the COMEX gold contract is in December, not October. In silver, right now it's September, but by the end of August, that stuff's going to roll into December. So when you start saying, well, what's the spot price? Well, in London, it is what is collectively averaged out among transactions with maybe a dozen banks and trading companies that are actively trading among themselves. In New York, it's a price that is not really reported, the New York spot price. There is a spot price on COMEX, but it's almost incidental to what's going on in terms of the trading volumes. You have the forward prices, the nearby active forward futures prices, and then you have a forward price, and then you have that. And then, as I said, each dealer has its own spot price. So one of the things that investors have to watch out for is dealers who say, well, we'll sell you silver at X cents above spot. Which spot price are you talking about? Your spot price or the spot price quoted in London by the London Bullion Market Association, which is a collection of transactions and an actual clearing price, or a spot price that is published by a bank in New York? Which spot price are you talking about that you're measuring off of?
Yeah, that's a thing that I think people are confused about. When you say that each dealer can have their own spot price, how are they able to determine for themselves what they want to sell silver for? I mean, would this be a factor above or below what is going on in London? I mean, what do they base it off of?
Ultimately, it comes down to, what can I sell it for? And, there was a company that was a price reporting agency. And a few years ago, they tried to create a data series that they could sell to people that was the Mumbai premium or discount to London. And silver and gold dealers in Mumbai and India, Hyderabad and other centers, the big center is Mumbai, were really offended. They said, the silver price in Mumbai is determined by the supply and demand of physical silver in the Mumbai market. And sometimes that's at a discount to London, and sometimes it's at a premium to London. But no one sits there in India and says, well, London is X, so I have to be X plus or minus Y, right? Obviously, London's out there, and you can arbitrage your domestic market or your local market to London if you want. And we saw this in spades in April of 2020 when, you had this wide arbitrage between New York and London. But the London market determines London, Mumbai determines Mumbai, Shanghai determines Shanghai, and New York determines New York. It really is there. And then the dealers who are working in each of those markets cue off of what's going on in that market. So there's this constant interplay among dealers. And you say, well, what are my competitors quoting at? Because I want to be a little bit higher or a little bit lower, depending on if I'm a buyer or a seller at that time.
So there you have it. It's kind of regionally dependent. If you live in Europe, you're probably going with the London spot price. If you live in America, you're probably going with New York. And as you can see, we have the live updating New York gold price here. So currently it's sitting at $2,998 per ounce, and it's sort of bouncing around. I've seen it go down to $2,997, $2,999, but we're still under $3,000 at the moment. So we'll see where it goes from here. But the other thing you need to know is that bullion dealers will kind of take this price and come up with their own price, which is close to it, but they're all going to be a little bit different. So when it comes to buying silver or buying gold, you need to look at the spot price as well as the premium for the different types of bullion you could be buying. And the overall price you want to try and get as low as possible, of course, so you can pay the least amount of dollars for the most amount of bullion. I know that might seem like a complicated answer to a simple question, but believe me, there's nothing simple about the gold or silver markets. Have a great St. Patrick's Day, everyone, and I will see you all in my next video. Silver Dragons out.